Thanks for joining us here for talk about embedded finance and trends and challenges. Um, yeah, I think we want to get started with as soon as possible because we have only 25 minutes to wrap up this session. Um, just start with embedded finance. I think most of you guys know what is embedded finance, but at least if you're not knowing about embedded finance, we can give a quick intro about that. What is embedded finance? Embedded finance is embedding financial solution into non-financial apps and platforms. So Megan, I that's kind of very high level definition. Obviously, I wanted to get our panelists' opinions or their experience. How what's their real time stories about the embedded finance. Maybe start with Rob. Yeah.
Yeah, happy to. Um, so, how many people here, by show of hands, know what earned wage access is? All right, we got a couple. We got maybe a handful. Yeah, David, you better raise your hand. Um, so, what earned wage access is simply is giving a worker the ability to access their wages as they earn it in real time and not having to wait until regularly scheduled payday. And how we use embedded finance is we simply use the bank's tools and technologies to help power our product. So we use the clearinghouse for RTP, and we use Visa Direct, among others, for OCT or the push to card rail. So when folks hit that button, it's actually the embedded finance that's the magic to the solution to get those wages, earned wages, out to those folks who need it most, if and when they need access to it.
Yeah, great. Okay. Maybe Diksha, you have anything to say about?
Yeah, so I have a more relatable story probably. How many of you get up in the morning and are super excited? Okay, I'm going to go to JP Morgan Chase today. Please show of hands. I'm pretty sure you work with Chase. So I moved to the US about 3.5 years ago. I was in Singapore and Hong Kong for well over a decade before that. And I worked with Bloomberg. They gave me a letter. I went to the branch to open an account. And the guy comes in and says, do you want a checkbook? Now, I actually smirked at him. And I went like, I literally looked at him and I'm like, yeah, I think I'm okay. Because in my mind, I had last used a checkbook when I was a student. And 2 days later, mind you, 2 days later, I went back and I asked him, can I please get a checkbook because I could not pay rent? That's how challenging it is from an outsider lens, perhaps, or maybe just by getting used to the way we are doing financial services in Asia over the last decade. Nobody wants to go and make banking another task to do in the day. And to me, that is embedded finance. Basically fulfilling the need for banking in the moment of that decision making or in the moment of that purchase decision or whatever activity it is that you need to use financial services for. So, long answer, but that's my personal experience.
That sounds similar to mine, actually. I think maybe I can tell my experience as well with traditional banks. When I moved US 12 years ago, I opened an account in a credit union. Actually, I've been using this till today. And in between, my wife keep asking me to open another bank account because some of the challenges in transaction and so on. So I tried to open a bank account 1 year ago. To get an appointment, I have to, I think 2-3 times I have to postpone that, or I didn't get the appointment, and then finally I got the appointment 4th time, and then opened the account. So that's kind of some of the challenges with the traditional banks, but how that this embedded finance this now become it's helping to simplify some of the challenges actually. I think that's also leading to one more things about accessibility. That's exactly we kind of touched upon a little bit. Anything you want to talk about accessibility, Rob? Yeah.
Yeah, and I think I did really appreciate that story from Thikshaw. I'm going to follow her lead. When it comes to customer value and applicability, I think it's super important to tell a story. And we have a customer, or had a customer, current customer, who was on a date, went to the gas pump before dinner, and tried to pump gas in his tank with the date right there, shotgun, and he swipes his debit card and it rolls 000. You or I would have a credit card, we'd be out of this jam in a jiff. Deal with it next month. He didn't have that option. The option he did have was he opened his Daily Pay app and he saw the available balance that's due to him next Friday. A lot of good that's doing him here at the gas pump, let alone dinner after. And he hit the instant button. Within seconds, the money hit his account, swiped his card, filled his tank, got on his merry way. And there is a happy ending to this story. That couple, it was their first date. They are now married happily. And it makes you wonder what would have happened if he didn't have that option. I mean, it might have worked out, but it
So
would have
who
been
says
tricky.
fintech is boring? We are better than a dating app, guys.
But I think as payment geeks, and if you're in this room, chances are you're a payment geek, so you know who you are. It's important for us, we see a bunch of numbers on an Excel spreadsheet and we get excited. But when you think about what the actual value is that your products are delivering to the customer, it's powerful.
Absolutely, yeah. I think definitely that enhancing access and access to the financial service is very, very important. That's kind of driving factor for embedded, how the embedded finance is evolving. Actually, I think we all know that embedded finance has many solutions. Like payments is one of the solution, actually, obviously, and then banking is another one, insurance and so on. And there are a lot of additional solutions keep coming. When maybe we can drill down to one of them, actually is the BNPL, actually another solution. It's buy now, pay later. You guys might have used it in many of the platforms. So yeah, we wanted to talk about that, how that's evolving, and anything more
Yeah,
about
so
it.
I think some of the secular trends that are driving embedded finance in general are what we've seen with e-commerce, right? Like our team basically expects e-commerce to grow from about 25% of retail to about 34% by 2030, and that is a secular trend that's happening everywhere. Within that as well, what we've seen is some business models have tested the time and headwinds that have come in the last 2-3 years, buy now, pay later being one of them. So globally, it's about 5% of e-commerce right now, which is still very early days. But what was interesting that really stood out was the US, particularly as the leading edge of the market, there about 8-9% penetration, is it withstood the test of time, and it withstood all the pressures that came along with the investment sentiment turning sour, how interest rates kind of moved, the liquidity environment turned around, and this business model kind of has stuck around. And the proof of the pudding in that is like the larger companies like PayPal, Apple, all these companies are coming in, the banks are coming in and basically revamping what they used to call as point of sale lending to something called as buy now, pay later now. So I think that is a very interesting phenomena that's happened. And if you just think about it, what is the essence of buy now, pay later? It's basically, even if you are borrowing, the decision or the actual transaction or whatever is happening in the back end is happening at the point of sale, in that moment when you want to make that transaction. And there is a lot of financial innovation that has happened along the way, right? Like your ability to underwrite credit in that moment for that particular transaction, rather than assessing Rob's entire credit history and figuring out whether they should be kind of lending him like a long credit line or not. It's basically, can someone buy this particular product at that point in time? So I think there's a lot of financial innovation that is happening across the industry, but it's these moments when you're able to prove and test, withstand the test of time, is what is interesting about buy now, pay later.
How is that adoption within customers? This particular solution.
Yeah, so I said US, it's the leading edge. It's about 8-9% as of Jan to April this year. What is really fascinating is it's going beyond retail now. So you're talking about buy now, pay later kind of going into services, from usual pay in 4, it's going into a longer duration credit product. So So there's a lot more happening around there. I don't know, at some point, maybe you'll have a buy now, pay later to pay your taxes or your property tax or whatever. Who knows, right? So I think it's still early days, but it looks very promising.
Any additional innovation happens in that field, BNPL, sorry, BNPL, any additional innovations?
Yeah, I think it's again, it boils down to the fact how strong your machine learning and your models are able to kind of predict. The predictive analysis part of it is the most fascinating, but we've not heard much use of generative AI or something, at least on the lending front at the moment, but that's something to keep an eye out for.
Okay, definitely. And when we talk about embedded finance, there is one more thing, important thing, or you cannot come across without hearing this word about payments, embedded payments, right? And behind the embedded payments, the real-time payments is definitely unavoidable, actually, because that's where I think the accessibility and then the some of the inconveniences solved by these technologies. So maybe Rob, you can talk about the real-time payments, how that's really driving the embedded finance. Yeah.
Certainly. And just to touch on buy now, pay later in a transitional tone, right? Earned wage access is, the way we see it, a worker's last line of defense before they have to tap in to true loan-based products. And that's where, in terms of the instant payment, and we use, as mentioned before, real-time payments in the OCT or push-to-card rail, we get those payments out within seconds. To Thikshaw's point, you can't be, and I have a longer story about going to a bank and trying to make a domestic wire and how that took almost 24 hours, right? What would our poor customer be doing there out in the cold trying to fill his tank of gas, waiting for all that? And the counter argument we've heard is the faster the payment, the faster the fraud. I've heard that on panels. I've been on panels where that's come up. And the reality, as Thikshaw pointed out, is you need to do all your due diligence on the front end. Because when your customer's ready for that payment and they need those funds, right? They need that money. They need it right now. And there has to be done beforehand. And that's what we do for our product. We underwrite the individuals, we underwrite the employer, and we do that before we even turn the thing on.
Okay, thank you. Any?
Yeah, I think real-time payments is another very interesting trend that is facilitating embedded finance, as Rob kind of pointed out too. If you just look at the adoption curve across markets, Asia, particularly India, Brazil, they are at the leading front of this. I think that adoption will definitely get accelerated. We'll probably see larger transaction amounts. There's a lot of support coming in from government-built infrastructure, which is giving them a head start in a way. So as I said, like UPI 2.0 was already in place when FedNow was proposed. So I think that acceleration will keep happening. Europe, we'll see probably some of those interventions come in again and also increase adoption of real-time payments. For the US, we are waiting and watching, and particularly because you already have existing infrastructure with the card networks, which basically reduces the reliance or the need for that real-time account-to-account transfer situation that we've kind of we're talking about in the other markets, where cards are not very dominant in a way. So that trend, I think, it's an interesting one to watch. Yeah, and I mean, one clear example that is what you probably will need for this curve to kind of get to leapfrog in the US probably is some big tech player coming in and providing like impetus for this cause, like I don't know, like maybe Apple Pay coming in and saying we'll facilitate account-to-account transfers or something like that in the real time. So the reason why I say that is because it's very hard to change consumer habits. And this part of the world, we are so entrenched in our cards that it's a difficult proposition. But just taking cue from what Visa, MasterCard are doing, there's definitely momentum, but will we kind of reach the India-Brazil level anytime soon? I'm not very sure. Like Fiserv did this amazing thing with Walmart, but yeah, we're watching.
And to put an exclamation point on that, in terms of the fastest growing use case for real-time payments, that's not legalized gambling. It's earned wage access. And if you look at the biggest consumers around this time last year, the data that we had available, Daily Pay, not the industry, the company, represented 1 in 10 real-time payments during that quarter last year. So you've got PayPal as the number one consumer, and it's not Apple, it's not Google, it's DailyPay, who's the number two consumer of RTP. So there's plenty of room. And again, we're the global leader in the space. We cover about 15% or less of the American worker. So there's plenty of green fields in our use case.
Well, I can add to that. Visa actually mentioned DailyPay in their earnings call, so definitely you're moving something there.
I wasn't going to do the shameless plug, but thank you, Thiksha. It's great. It's great when your big brother calls you out, the CEO of Visa, on the earnings call, and about our renewed partnership, which now will also represent cross-border remittances, right? So folks that need access to their pay and want to send money home to their relatives, wherever they might be. That's our newest capability, and yes, we partnered with Visa, as Mr. McInerney represented on the earnings call.
Sounds good. Okay. I'm probably shifting your focus a little bit on the regulatory side. Actually, again, the same topic, payments, real-time payments. Again, Sarah, you might be expert in that area. So what do you think, like, the regulatory plays a major role in the real-time payments? Anything, any additional insights on that? Yeah.
Yeah, so I'm going to come to the discussion a little bit hot because I was asked to join the panel and put on my banker hat. And so I'm in full disclosure, an investor and a director in a BAS bank based in Nashville, Tennessee. And I'm listening to and a fintech innovator, and probably you saw, really love the infrastructure side with my conversation with Bill about Apex. In this case, where are we in the United States, ostensibly in this concept of open banking, the ability to actually embed different fintech disciplines in non-traditional financial services players and leverage the charter of a bank. And I think where we're heading is into a period where we're going to lock horns with the regulators. We already have as bankers, as many of you know. Rule 1033 puts a tremendous onus on you as innovators in the fintech space, as well as us as bankers, to actually provide customers unfettered access to their transaction data, their most sensitive personal financial lives. That itself presents a challenge on top of an already very difficult environment for AML KYC, for cross-border transactions. We are well behind in the United States from UPI in India and other methods of identity. And so I think as we have these conversations today, one of the things I would implore you to do is, if you seek to embed fintech solutions in any capability, you recognize that your banker, who's going to contribute their rails, a little different with MasterCard and Visa, but if you're looking for a traditional bank partner to do any lending as a service, PaaS, which is payment as a service, be prepared to contemplate how you can actually adhere to a very rigorous AML KYC responsibility that your bank has. And I think each bank in the United States sees partnership, at least I know, I shouldn't say each bank, many banks see partnership with the fintech community as the next generation of deposit gathering and serving its customers. Main Street is no longer just that sidewalk, it's a digital environment. You want to work with individuals who are earning wages with the next generation of payments lending, but my view is the regulators have not caught up with the rest of us in that ability to strengthen our banking sector through embedded finance.
Now, what a timing to say that, Sarah. Like, definitely, I don't know if you followed, like, we had this episode post-regulations where a lot of fintechs were facing issues because the banking end could not keep up, like the pace of the programs kind of took a hit because of the recent regulation announcements, and definitely more eyeballs on bank fintech partnerships now. So yeah, very, very valid point there.
Yeah, think about a community bank being asked to embed what Bill said this morning, 1 million accounts in a weekend. That's how you open that is just, it's mind-boggling. I sit with a team, and the resources you have to really be a partner and an accelerant for embedded finance. Our infrastructure has to catch up. Our regulators have to catch up. But it's a very positive future.
Yes. And when it comes to regulation for our product, as Sarah mentioned, right, when it's a new product, earned wage access did not exist a decade ago. you have to educate and be willing to work with those regulatory bodies. In particular, recent news that directly affects us is the great state of California giving us regulatory certainty in their state. And no state employs more workers than California. So we're excited to continue to work state by state and with federal regulators. It's really a matter of that educational piece. And then for us, and this is what we stand for, is we are on the side of the American worker, and we want to enable them to give them that flexibility and control to be able to pay their bills on time, to be able to fill their tanks with gas when they're on their first date. And if we're going to continue to work state by state and with those federal regulators, that's exactly what we plan on doing.
Great. Okay. I think slightly trying to shift the focus on the bank and fintech collaboration. That's probably the next, phase in that. I know that embedded finance is like evolving, scaling up. So as we go further, actually, these banks and fintechs collaboration is unavoidable or have to happen. So in this phase, what are the what are the challenges or the strategic changes that the fintechs needs to make in order to collaborate well with the banks, and maybe just talk about that. Yeah.
I think I would start by just a simple metaphor. We treat our fintech partners like a digital branch. So anything that we were trying to emulate is I acquired the bank with 3 other investors. It was a 100-year-old bank, and we bought the charter. And we had 2 branches, 2 bricks and mortar branches that had, frankly, fairly manual processes. We've digitized all those processes to enable our fintech strategy. But we have to treat you like a branch. We have to treat you with the same care that we do our own customers. And so as a fintech, I think be prepared to really help your teams, foremost, understand and be literate about those rules that the banks have responsibility for. There are very harsh regulatory penalties if you don't adhere to AML, KYC, Bank Secrecy Acts. But it should not be an impediment to your learning, but a partnership. And so I think the first thing is preparation for your team and how you're presenting yourself to your customer base recognizes that the way that the bank rules today are written, they are evolving very quickly. But I think that would be foremost in my mind, is to really have your team think of the bank as a partner and not an impediment, but understand the meshing of the knitting together of the opportunity with the regulatory requirements.
So do you feel that banks are coming forward to work with fintechs? That's
Selectively, yeah. I think we all know, if you're in this room, you've seen about what's happened to banks who haven't been able to manage their
Right.
general ledger. FBO accounts are very challenging when you're opening 10,000 accounts in a weekend. You have to know where your customers' money is sitting. So I think you've got banks that are willing to do that and banks that have pulled out. But as regulatory clarity comes through, the state of California is really contemplating a future where banking is, as you said, in for the consumer again. And that's exciting.
Wouldn't that be nice?
Wouldn't that be nice?
So I think one thing that we've noticed as a trend is when the fintech industry, so to say, really kind of kick-started, the concept was, we're going to replace banks. We're going to change the way people bank. And it was a very revolutionary term in a way. That has evolved and changed to realizing that banks are really not going anywhere. And there are like a lot of reasons for whatever, we've kind of come on both ends, right? On tech evolution versus the banks kind of coming from where they are. There's a lot more need for partnership and for integrating those services. And there are a lot of new business models that are evolving as a part of that, and more so in the US, right? Like the diversity of the banking infrastructure here, the number of community banks and a long tail of smaller banks. There's just so much room for fintechs to kind of grow into that role. We've heard new business models evolve as, say, for example, the smaller banks or the community banks that don't have a credit card. Bulk of the credit cards issued are technically from all the New York banks, right? how can fintechs kind of help them overlay a layer of credit on top of that? So there is a lot of opportunity out there for partnerships. But to your point, Nanta, one thing that I think fintechs probably are already learning and will learn along the way, and we've seen it's not just the fintechs, it's just the dichotomy or the difference between the way tech companies think and the way a traditional financial institution think are very different. We've seen that with Apple, right? Like Apple Goldman partnership came in 2 years. It's just the DNA is different, right?
Yes.
So what we need to do is basically learn to coexist and work together.
Absolutely. Yeah.
And for our business, as the director of commercial banking, it's with great pride that I left the banking sector and basically bet my whole career that it would be not easier, because none of this is easy, let's just be honest, when it comes to fintech bank partnerships. But I thought the only way I could make meaningful innovation and drive that at a bank is to prove the concept at a fintech where you're not regulated by your own internal bank compliance, and then go back and partner with a bank. We've done this in 2 phases thus far, and I'll spoiler it for a third one potentially. And the first phase, as we mentioned before, is embedded finance, using the bank's tools in their toolkit to power our product and deliver that value within seconds. That's phase 1. Phase 2, we've partnered with several banks, and in particular PNC. PNC has white labeled our solution. It's called PNC Earned It, and they can market, brand it, sell it as their own to their own corporate and commercial clients, and then enabling their workers. And in particular with this solution, whenever you put a bank's name on a fintech product, it becomes a bank product and regulated as such. And we've done that, working with our bank partner. We now have a bank compliant app, which is really our app. It's powered by DailyPay, but it's marketed, branded, sold as their own. This leads to, well, what could the third phase potentially be? And what if there was a world where DailyPay was embedded in a bank solution? I will leave it at that.
All right. Okay. I know 25 minutes is not enough to talk about this very interesting, very vast area of embedded finance. And I think we all excited about future of the embedded finance, and the technology is going to play a major role in that embedded finance going forward, particularly AI. And there are many other solutions coming in place, like financial advisory, from where my company is contributing to that actually. So I think we're all excited about the future of the embedded finance, and looking forward to it. Thanks all for being here and listening to us. Appreciate it. Have a great day. Yeah. Thanks everyone.
Thank you.